Welcome to the Canadian Investors Course Session 1 Income Investing Commentary. As with all the slides before and future, please note on page 2 the terms of use and disclaimer, which was read in full in the introductory section. Please do read it. It applies to each and every of these segments. Please remember also that the commentaries contain some opinion. They're an addendum to the basic course, and they will change from time to time over time. Note slide 3. Get that federal government off my back, said Wall Street when they were looking for deregulation in 1980. But in 2008, where's the government? Who's got my back? Said Wall Street in 2008. They just speak the tune which best suits their needs. So this commentary is going to talk about interest rate directions through some charts, and it's going to highlight the home capital GIC issue. Slide 5 there's a summary article on home capital GICs. The key question facing home capital group was whether they were going to maintain their deposit base. There was a run on the bank when depositors withdrew at least $1.6 million from its highest risk savings accounts in short order, when it was revealed that there were some discrepancies in the way they were accepting mortgages. The GICs accounted for more than 80% of the company's deposit base at the end of 2016, so to stay in business over the long run, they have to find a way to continue to sell these investments. Home capital subsequently being reorganized. Shareholders who held on or who bought into the stock when it fell made some pretty good money. And it's been since revealed that perhaps there are issues with some of the other banks, and a stronger reason why one should limit one's GIC investments to the maximum of $100,000 per issuer. If you need more on this, make sure that you talk to your advisor or a trusted wealth professional to make sure that you're on the right track. Okay, let's look at a few charts. First of all, the U.S. Treasury 10-year bond yield. You'll notice that it peaked around 1982. It's now collapsed to lower levels than any other time in history. If we look at the same thing for the 5-year Canada bond, looks pretty much the same. Well, the chart's a different shape, but it's got the same idea, same timeline. And now if we look at the U.S. Fed funds rate, oh my God, for the last 5 or 6 years, they've been pretty much zero. Does that seem normal? And the Canadian bank rate, same thing. On top of that, interest rates in Canada are lower than they are in the US currently. We're talking 2017, mid-2017. And that's not natural. Normally, US rates are a little lower than Canadian ones. So what's an income investor to do? Well, you need to look at your portfolio. If you own bonds or debentures, or if you own bond funds, or if you own income and growth funds or balanced funds, or if you have a managed very conservative fund, or if you own other forms of yield investments, you really need to pay attention to session 2. That's the end of this commentary. Thank you for listening.